Welcome back, everybody. Sive Morten is here with the Forex Peace Army.com. As usual, let's take a look what's going on the Forex market. Mostly we will talk about the euro currency, but just slightly we'll take a look at the Great British Pound and on the dollar index, because they have some patterns that might clarify the situation in the euro currency. Euro currency picture looks most difficult for analysis, so compared to other currencies right now. It's a bit choppy, without some real clear patterns, and it needs some assistance from the side to understand what's really going on. First of all, based on the analysis that we have prepared in the weekend, you could see that in general our suggestion was correct. Picture was looking bearish and it remains bearish, although performance on Monday was a bit different compared to what we have expected. So if you take a look at the full time frame chart, recall that we mentioned a couple of grabbers here and said, take a look, if market will show action back to the 1760 area, we could decide on a possible position taken with this butterfly if you would like to, because there was some grabbers on the lower time frames. But instead of that, you can see market has opened with the gap down, and now it's forming kind of the butterfly. So on the full time frame chart, we even could increase the scale of this butterfly just to make it bigger, redraw it a bit, so it might be now considered like this one. The target of the butterfly will not change, mostly it stands the same, but this redrawing we need to use for possible performance on lower time frames based on the picture that we have. So that particular what really could happen. Why this butterfly, why this target? Because 116 area if you take a look on the daily chart, it stands very close to the OP target 1623 and close to the 116 FIB support. So this probably will be next destination point. But larger scale suggests that it might be just a starting point. So it might be more extended downside action. Why? And first of all, let's take a look at the dollar index. You could see that on okay, let's dollar index. So you could see that here something like hand shoulders is just forming. So right arm is just coming to an end, and we don't have yet any extension. If extension will follow, you understand that on euro currency it will be the same extension to the downside. And why I said that euro currency is a bit difficult for analysis today, it's just because take a look here, you have clear shape, right? So this full time frame chart on the dollar index, while if you take a look at the euro currency on the full time frame chart, it's very difficult to recognize the same thing. Something similar, but not as clear as on the dollar index, right? So if you wouldn't have seen the picture on the dollar index, it was really a big challenge to identify these hand shoulders that we just have seen on another chart. That is first cross market suggestion. Second one is on the 10-year bonds. If you take a look, in the beginning of the week, market has opened with a gap up. Also, we've got grabber on Friday. It suggests action on the yields above the 4.2%. And as you understand, any upward action on the yields, it's a supportive for dollar. Correspondingly, these two analyses coincide, right? So we see similar direction as on the dollar index, as on the 10-year bonds. It's correspondingly increased chances that probably that might happen. Correspondingly on the euro currency, we're watching for possible downward continuation, but this slightly reshaped butterfly. So if you have taken position here, somehow you of course could hold them and just protect your position with the corresponding stop orders. If you do not have it, we have the setup that might be helpful in this situation, although I'm not sure that it definitely will work, but I suspect that it might be. So let's take a look at the hourly chart. First of all, on Monday we've got the gap that is not closed yet, so this gap still exists, and you know that on the forex market very rare gaps remain unclosed. So market is tending to complete this and cover this gap that exists, especially on intraday charts, and this is hourly chart. That makes me think that theoretically we could get a kind of the ABCD pattern here, some kind of the ABCD retracement, which become the top of the potential right wing of this reshaped butterfly. And what is actually most important to us is that with this ABCD completed, we will be close to the invalidation point of the butterfly. So risk here will be very small for possible position taking. And simultaneously we'll get a kind of the garter triple to sell, something like this. Here is actually, by the way, take a look. This was a nice garter triple to buy instead. This market has completed this to the downside. Now the reaction stands to the upside. Finally, if you take a look at the performance of the Great British Pound, things that we talk about, the hand and shoulders, recall this pattern. Currently it's still unclear whether this will work or not, but on the Great British Pound you could much easier to identify big head and shoulders, right? The similar that we have on the dollar index. Why it might be important? And you could say, take a look to the left, you have another head and shoulders in opposite direction. But this head and shoulders is already done because first it has completed the target. We already traded this pattern, and I explained why it is not valid anymore. Because once the target of the head and shoulders has been completed, market dropped below the C point of this ABCD pattern and below the shoulder. It means that it can't keep going to the 1618 extension, which means that this head and shoulders is done. That's why you could keep an eye on this pattern, and it is bearish. That reminds actually the shape of the pattern on the dollar index. So with this pattern and its corresponding picture on the hourly chart, it's difficult to say, because on the hourly chart we initially thought that it might be also head and shoulders, but currently it definitely shows that it's kind of the triangle is forming. And if market will drop below near around 134.25, probably it's just keep dropping lower, it definitely will tell us that we're going with a bearish pattern. Cross market analysis suggests that chances on the downside continuation seems a bit higher than bullish reversal. So taking it all together, I suspect that, suppose that it makes sense to wait for possible retracement. If market will come closer and actually will close this gap to around 117.50 area, we could start thinking about taking the short position if market will get there. Right there, at this point, entry on the short side looks not as attractive. So of course everything could happen. Market just keep going lower, drop the lows. It is possible. But since we are searching for good points for position taking, now we have an option to choose. We prefer to wait and get the better one. That in towards what we have on the Forex. Let's keep watching. Hopefully we will get this setup that we have just discussed.